following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft koala bear of Wall Street. Just a big, just not big. Well, I guess I'm getting bigger, but a nice cuddly bear. I think I had a little koala bear when I was a kid. Maybe my dad brought it back from Australia. And of course, we've got a market for the first time in a few days that is lower. And people are kind of thinking that it couldn't happen. Not on their watch. The market could not be lower for any reason whatsoever. And a little different out here for a change of pace. Right now, we are off 7.5 points on the S&P cash, 1.6 billion shares on the New York Stock Exchange tape. Of course, probably not going to see some volume come in till tomorrow. And then, of course, we've got options, market makers going delta neutral, probably late Tuesday, Wednesday, and probably finishing that up by mid-afternoon on Wednesday. So we're probably going to have a little volatility in here to start the mid-summer trading, and we'll have to see just how far that goes. Anyway, we're going to get into the stocks that are moving out here and why. And we got some decent amount of news, but we'll get into some charts in the second half of the show. In 1930, on this day, construction of the Hoover Dam began. Over the next 5 years, a total of 21,000 men would work ceaselessly to provide what would be the largest dam of its time, as well one of the largest man-made structures in the world. And I'm glad I went through and took the tour before the terrorists won and wouldn't allow anybody even near the structure anymore. Unclear what a single individual would do to a dam of that size, but who knows? Well, at least the terrorists won. That's it. That's all that matters. You can't go look at it anymore. Of course, they've moved the road over the top. Well, not move the road, but move the and put a new bridge in, so you can't even drive over it anymore. But I digress. And the more I digress, the more of those awards keep showing up. GT Advanced Technologies, we had somebody call about that a few weeks ago. It did go a little bit farther than I was thinking it could. One of the interesting things about this stock is how it's being misrepresented. Yeah, just getting a quick quote on it. Okay, off almost a 13% today on a tiny downgrade that has thrown this stock for a loop. And I want to make sure everybody knows the big story that everybody's been pushing over the last week or two. I'll just call it the big lie. It is that GT Advanced Technology is going to be making these sapphire displays. Maybe I'll call and talk about it on Friday in the Tech Insider. But the first picture of the sapphire display is making the rounds of the internet this morning. Of course, it's just a piece of clear glass, and I can't show it to you with the technology we have right now. Maybe it's still tough, but it is a piece of bendable glass, or it looks like glass, but it's actually sapphire. GT Advanced Technology makes all the devices to make sapphire crystals and ingots. They do not sell sapphire for the most part, especially for what they use and what Apple wants to do for their bigger new phone coming out this fall. So the whole idea was that GT Advanced Technologies was, one, going to find a lot more people buying their ovens, And the answer to that is probably no. No one's going to need to buy the kind of volume next year that Apple's provided to them this year in selling those ovens to make these sapphire bowls. But basically someone called bovine excrement on what happened, and this thing deflated fairly quickly today. For a $20 stock to be down $2.50 on a day where the market's a little weak to begin with, gives you a little idea. But these people were really pumping the stock up, and I didn't think it would go beyond 18 bucks. They were able to blow through that, but it was a false breakout, and you just really needed to be worried about stocks where there's a lot of lies going on. And I'll research just to make sure that they weren't selling sapphire ingots or bowls themselves. And why I couldn't get a hold of anybody in the investor relations department to validate that they won't be selling sapphire themselves. It just doesn't make sense. Apple wants to control it all themselves. Apple bought the old building that GT Advanced Technologies, one of their customers, had for making these sapphire ingots. So I'm thinking that this is just basically what you look for, and that is the ability for a lot of these people to kind of, especially when a market's this high, to run a little long on the bull and short on the true substance of these companies. Now, could this company go much higher? And that would probably take a lot of people, including Samsung, buying these ovens. But, of course, they're going down a different road with graphene and graphene displays. And we're probably still waiting to see the real shoe drop on that for smartphones. But we've already seen these big curved screens advertised relentlessly on at least the cable stations I've been watching over the last 2 or 3 weeks, showing a lot of clips from movies. And that's going to be two technologies diverging. Apple with their Sapphire, a proven technology, although expensive. Graphene should be the consumer application, far cheaper than that as soon as they can scale up to quantities. Of course, Samsung's built $1.5 billion facility just to build those. So a lot of this stuff is going to be going on in the near future. Of course, here's a nice little chart where this thing falls and gives you kind of a good idea. But we're down on volume. What do we have out here? Almost 23 million shares on GT Advanced Technology. Of course, it just made a high up there at $20.54 on 14 million shares, so give you a good indication of that. And, of course, you've got a nice little gap that's been acting as support down here at 1274. There just isn't really a whole lot in this range. You're going to find the first line of support coming in somewhere around that $16 level. So I'm looking for it to probably meander down there. Not a bad company, just their future kind of being exaggerated a bit. And we all know that only happens every once in a while in the stock market. Not every day. Is it worth shorting? Well, not now. And even then, it was tough to get shorts because I looked at it. I don't like to short stocks that are below 30 bucks. The odds are against you. But I have a feeling this thing's going to bounce around somewhere probably between 12 and 18 bucks probably for the next 6 months. So maybe if it gets down to 12 bucks and volume's light, I can justify it. But my guess is that there's not going to be anybody else like Apple coming by and asking to buy tons and tons of their machines to make these sapphire ingots, although other people will, other cell phone manufacturers will probably want to do the same kind of sapphire thing that they're doing. But hard to think that they're ever going to get an order like Apple gave them ever again in their existence. Of course, over the weekend, Google is starting to do the same thing that Netflix did for a while, and that was start to put error codes up that show and suggest that your ISP is responsible for slowing down your data. This, of course, Netflix did it. And they got threatened by Comcast. The vestige of all evil, Comcast. All these ISPs are pretty much scumbags. But anyway, Google is now gently suggesting, maybe a little bit better, suggesting that if it doesn't work, they have websites to go and show just how the data works on different ISPs, and kind of gently pushing people to the point where they'll pick up the phone and start reaming on their ISPs to start get going on upping the ability. Of course, these ISPs basically just want their beak wetted by some of these big folks. Google has a national backbone, much like Amazon has, and it's not going to be one of these things where it's Google's fault. Google has all the bandwidth in the world to within a couple of miles of your house. At that point, Time Warner, Comcast, and other evil Hitler Youth will get in their way and try to slow it down. Kind of the equivalent of someone standing in front of the FedEx driver when he gets down to the street and maybe holding him up for a day or two. That's basically the job of these Comcasts and Verizons. If you look at their CapEx, they are not spending any money. Or additional money to really upgrade to Google, like gigabyte fiber. They are in a few areas where Google's coming in, but if Google doesn't come in and compete against them, then they're doing nothing, which tells you exactly what they're planning on doing. But if you see something on YouTube that says and where to go and find out why your data isn't running smoothly, you can check them out. Microsoft's coming out with their Kinetic for Windows sensor. To this point, it hadn't been a huge seller, mostly because there hadn't been a great way to develop for it. Now that they have one for Windows and PCs, probably make it a little easier for developers to make some of the neat games that we've seen suggestions of over the last year since the Xbox One has come out. But you'll be able to buy it from you're going to be able to buy it July 15th, and they're taking pre-orders already for $200. But a lot of interesting technology in these, and some of the things I saw over the weekend that Microsoft was showing off was interactive medical applications where a doctor had blood all over his hands and couldn't really touch anything. And he could step back and control the computer remotely. Anyway, when we get back, we're going to talk about Xiaomi. They're the big smartphone manufacturer in China. They're growing like a weed. We'll get to some other stuff. And then the bottom of the hour, well, let's start looking at some stocks. Anyway, we'll be back in a moment.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, we were talking about Xiaomi. This is the big, huge mover in China right now making smartphones. They did report basically yesterday actually, for us, or last night. They've sold 26.1 million smartphones. Xiaomi's revenue's up an impressive 150% to $5.3 billion for the first half of the year. That is a double. Well, that is already exceeded, let me put it that way, all of what they did last year. So the biggest manufacturer of smartphones may be somebody else in the very near future, as Xiaomi makes their Android kind of clone phones in China, and they are starting to snap them up fairly quickly. Intel was expected to ship late this year their 14-nanometer Broadwell-based notebook and laptop chips. That's not going to happen. They're basically saying probably mid-summer next year. Didn't really seem to have a lot or a big effect on Intel today. Let me check just to make sure. I'm down 11 cents. I have a feeling since AMD is not really a competitor anymore for this kind of stuff, probably just didn't matter. But kind of interesting to see Intel put some of this stuff off until 2015. This had been on the roadmap of products and this stuff coming out. They also have another iteration of this that's even going to be better. This Broadwell chip is based on what's available today. They have also another version of this at the 14 nanometer that's supposed to be extremely powerful compared to what's available today. Rocket Fuel, a lot of these downgrades coming today on these stocks and recent IPOs where reality just isn't holding up. One of those is Rocket Fuel. Get a quick quote on that. And these things are coming out. This one came out kind of not too late after the open. But what I wanted to show you is just how bad some of these recent IPOs have come back down to ground. And, of course, I'm looking for these things to come back and test the lows. In this case, you really had to worry about this $19.31 low out here. And what was it about? Probably about the 8th of May or something like that. That had 9 million shares and going to be probably coming back into that level. But a lot of these downgrades coming out over the last, actually today, and setting up a lot of these IPOs to get washed out on the way back down. Another downgrade is Tidewater TDW. Basically, the report out showing that their offshore service vessels, or OSW as they call them in the energy sector. These are the ships that bring all the guys back and forth if they don't fly them out on helicopters, that bring all the food and water and all the other stuff that offshore platforms need. It really looks like there is a huge movement to fracking all over the world, not just here in the United States, to recovering shale. It is so much cheaper to do it on land than do it off the shores. Also, environmental regulations making it onerous to do so. And if you're going to roll the dice and try to get some crude, right now everybody seems to be going from the offshore to onshore and looking at fracking. And at least some of these reports show how much the prices are coming down on these offshore vehicles and why Tidewater today is getting kind of hammered. We're also seeing natural gas down. This thing pretty much getting hammered. UNG's off 80 cents. This is a 6-month low on the contract, if I'm not mistaken, today. And I've talked about it probably for 3 years running. And that is, there's a few times of the year you really don't want to have a long position in natural gas, and this is pretty much it. There's a huge, and even this data is old, but through 2007, it's pretty much stood up. And that is the seasonality of natural gas. But if you're watching on Tiger TV, hopefully you are, you'll see these seasonal charts from a guy named Dimitri Speck, who did 17 years on natural gas. The last year was 2007, but there's always a spike down about mid-July, and at least seasonally adjusted, there's always about the weakest time of the year, other than right after the beginning of the year. But we'll be back to talk about this in a minute. You can give me a call at 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, we were talking about natural gas futures, and I've been showing this for a number of years, but we always get new readers and listeners. There's a website called seasonalcharts.com. I've always thought that if I get around to it, that I'd want to do the work since 2007, since for the charts that he's done. But pretty good website where he shows the seasonality of it, mostly based on demand for electricity and, of course, heat in houses. But pretty good indication that you find seasonal lows somewhere around July. Of course, you can always look for a hurricane or something else to change that. But natural gas futures tend to have a fairly decent weakness about July. They tend to overshoot into December. But if you're looking to buy these things, August 1st, probably a good time to look. If your technicals match up at that time, also fairly good. I know a lot of people have been saying that there's no way that they could fill back up all the reserves, but there is an awful lot of natural gas out there, and it doesn't take a whole lot as long as the prices are up to come out and fill those. I know everybody's saying they're not, but I have a feeling that they are, and one of the reasons why we're seeing, 4 or 5% move in natural gas today, but just know that we're probably going to get a little bounce in August, and then you get a kind of a pullback, and then into September, probably the strongest part of the fall, and of course February to March at the end of winter. But as things get cold and then get real cold, there's a fairly good strength to the market. And it is a mad market. It is, what can you say? Oh, well, we wanted to go back here and look real quick. I need to check and see how we're doing. We're off 10 points on the S&P cash, 1.75 billion shares. Of course, now we're in December trading, not a lot of volume on Mondays and Fridays for the most part, but at least a decent movement. 10 points, rather tough for a lot of people to even contemplate that the market could pull back that much. This could be the start of something bigger. I did add a lot of puts this morning in my portfolios and offered a couple of short on some things. I've got puts already, not paying off well on volatility, but I have a feeling that we could be seeing a big move that goes along this way. Also think that there are some very ripe gold miners out here that could fall fairly quickly. Some of the charts on some of the strongest ones now look a little weak. And I'm not saying gold goes down, but certainly it looks like maybe any pullback will have the miners sold as well as regular garden variety Main Street stocks going on. So I showed Tidewater, didn't I? There's a few other stocks that have me scratching, especially in the bond market. One of them is BlackRock, BLK. This is one of these big guy stocks. I mean, heavy hitters out here. BlackRock, you probably heard about them. Basically a huge investment money manager, primarily provides service to institutions, but they do a lot of bonds, kind of like PIMCO. And, of course, I think they've been getting a lot of PIMCO's business since Bill Gross kind of went half nuts against Hilarion, one of the guys that worked for him. He's kind of maybe admitted, I don't know, if you read between the lines, that he's off his meds or was off his meds, but he's back on them. Certainly he hasn't been, Bill Gross at PIMCO hasn't been talking a lot about. But this may be the best part of BlackRock's business. They've gone up and come within a couple of pennies of testing the January 16th high at 326 with 1.5 million shares that time. And, of course, you hit that on July 1st with 540,000 shares, about $2. But basically 33% of the volume, you get within a 0.25% like you did on BlackRock. That's good enough for me for a test. Certainly doesn't look all that exciting. Go back here and look at it. What you really did have is some very heavy energy down between that January 16th high and the February 3rd low. And energy came in, light bounce, more energy to the downside, and again, yet another light bounce all the way up here with a very light volume last few days. A little pullback today. I think probably there's better shorts out here, but I think this is showing the overall weakness that we're seeing in some stocks. Expedia is out buying somebody today, and I didn't think much of it when I read the news, so I've quickly forgot who they were buying, but some little company. Didn't, to me, make it sound like Expedia was going to vastly change what they were going to do. But certainly Expedia is up here testing highs with lighter volume. I'm looking at the February 21st high, $81.78, 2.1 million shares. Light volume, and, of course, on Thursday. 600,000 shares today. You really needed some kind of big movement out here, and I just don't see it. Now, you can say that maybe it was the 4th of July weekend, all that stuff, but I have a feeling we're probably going to get up there, tag that again very lightly, and that may be all there is to go on this. Now, I think there are better stocks out here to short, and maybe this thing needs to come back down, and then one more back higher push back up to 82 again on lighter volume, and that maybe this sets up the sell on this thing. But the energy down off the $66.93 low on April 24th, basically you've got a nice little V pattern here. The energy on the way down was about the same as the way up. It came back into support at the right time with 9 million shares for this gap up that happened on the 7th of February. So right now, not a bad-looking stock, but a great deal of these stocks not finding any kind of real push. Helmerich and Payne, another one of these stocks out here that did test its high on lighter volume. Of course, this was it was on Wednesday, so you still had a full day. Came up and tested its high. Drilling rigs, personal camps, basically this whole sector in energy is looking a little toppy. The April 24th high at $117 came in with 3.1 million shares, and basically you had 1 million shares last week, and even if you use the most aggressive look at volume, which is the high on 620 that had 2 million shares, you're still 1 million shares light as you get into this 118 area. And, of course, not surprising, we're seeing some fairly decent pullbacks here. IJR, which is the small cap 600 index funds, after all the rebalancing and everything last week, if you could really see something come in out here. And I really haven't. Of course, Friday, you had a big candle, not a lot of volume, and a little bit of pullback in here. More of something I'm watching out here. Some of these other big stocks that have hit these highs, pulling back on lighter volume so far today. Illumina, the huge run from $128 down here, which was a support on a gap, both on the April 29th low and the April 15th low at about 127.5. Energy was up, was not too bad, but once it gets up to this 180 level, certainly looks like a lot of the energy comes out of some of these stocks. Pandora Media, I wanted to get this thing short and missed it. Kind of the dates didn't work out, and I wanted to kind of see how this opened up. But boy, it raced out of the gate down. Again, I'm not a big fan of any of these streaming mobile services. Nobody's made any money yet. Apple's going to get into it. Google's going to get into it. Amazon's going to get into it. I'm thinking this is going to be like having your own podcast. No one's going to exist on the planet that doesn't have one, including me. And Pandora is kind of one of these services, but certainly another great sign with half the volume up here at this $30 level. And if I get lucky, this thing's going to bounce. I'm going to get another shot at it. Panera Bread, this thing's one of the few stocks down here that's actually could be making a bottom, at least a short-term bottom out here. It's been bouncing around this $146 level. Light volume for the last couple of days out here. When we look a little farther back, let me get this here, where this gap started. It is a gap that had huge volume. What is it there? Is it 3? Yeah, about 3 million shares, which is a pretty big volume for that. That we're coming back in here in the last few days with 640,000 shares compared to 3 million gives a pretty good idea that this thing is one of the few stocks that's pulled back and found at least some support. Maybe the market will help it out. Another one out here that's in the same vein, Starbucks making a light volume top, going up against its March 21st high at 78.64. 9 million shares, of course, going up against it on Friday with 3 million shares, but 2.5 million shares today. So not a lot of people rolling back into this thing. Another one of these things where I think that there's better short out here. Energy down to the $67.93 low on April 15th, back up all the way here, about the same. So this one, why it may have topped out, probably not seeing the kind of weakness that you'd like to see in a stock pull the trigger. XRT is another one. This is the retail sector. Came within about 20 cents of the high, and this is a good one to give you an indication of what I do look for. This one, more of a kind of a W pattern, is pretty good, and that is this thing came off the November 29th, 2013 high at 88.95. He had some fairly decent volume up there. Came down to the low on February 5th. And if you can't see this number right here on my Power Law Vector Indicator number 3.5, we did kind of the same thing from the April 15th low back up to the high on Friday, but the energy was probably off about 35% compared to that November 29th to February 5th low. So not a lot of energy on this last leg up. As you get to the high, you want, of course, some decent volume. 1 million shares, not a whole lot. If we get back up here, again, on lighter volume, you could see this retail sector roll over fairly quickly. There was some other stocks that I wanted to look at. Let me clean up my desktop here so I can get to them. I thought I had these all queued up. Oh, there they are. Wanted to look at some of the stocks that were moving and just get through them. I wanted to look at the charts too. Amazon off 1.5%, not a big deal. Let's take a look and see Amazon, if we can make anything for this. I actually have to order something from them as soon as I get off the air today, but it is interesting. This thing's finding a lot of resistance right at this 340, 337 level. Seeing that again here today. Not a lot of movement, but it looks to me like there is some kind of seller right around this 340 level. You did test the low down at 288 on lighter volume, less than 50%. So right now, kind of looks like unless this buyer the seller gets out of the way at 340, kind of a trading range probably in this 288 to 340 level, which is a pretty wide swing out here. Intuitive Surgical, ISRG. And, of course, you can give me a call at 877-927-6648. Post a message in the den. He's got a CMG question. I'll do that. Samsung's still number one in China. I think, yes, they are still the number one retailer for smartphones in China. Will that change? Yes. I have a feeling that this phone that Xiaomi builds is just so much cheaper, and people don't use all that much data in China anyway. CMG we'll get to in just a second. Intuitive Surgical looks like this thing has started its ABC down, and let's take a quick look. Did basically a 41% retracement. If you look at the April 3rd high as your A point, your May 9th low at 346 as your B point, and the June 27th high at 426 as your C point. This would set up a massive ABC down. And I did hear some rumblings in the political world over this weekend that may be the reasons that this stock is looking rather weak and could be making an ABC down. And that is that they're looking at taking away the mandate. There's several senators and House people running for election this fall, and they're desperate to get out from under that applied mandate. They may just push it off a little ways, get it past this voting cycle, but kind of tough to tell. Anyway, we'll be back in a minute to finish up with Intuitive Surgical.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Anyway, if you're looking at something that could move fairly largely, ISRG really looks like a massive ABC. The test of the 346 area is going to be what you're looking for. You don't need a lot of volume, just 1 million shares. That could be a great deal and a huge move out here. Always known that this stock is driven by news more than just about any other, and tough to actually trade it out here. But at least the chart is showing that. I had a question. Of course, just a 1-to-1 ABC, give you an idea, it takes you back to $231. So it may take, this may be a 60-day C to D leg, but keep a close eye on that today. We've got 319,000 shares, so probably going to get a bounce out of here, maybe a little bounce up on light volume so far, but keep an eye on that. CMG is another one. We've got a request from the den. This is a hard one to figure out. Certainly no volume in the last week. If you want to talk about something that reeks of distribution, at least on the chart, certainly it is Chipotle, CMG. A lot of discussions, especially probably around that 500 level on the way up, of them finding ways to extract more and more money, drive-throughs, all kinds of other stuff. Seems like Chipotle's not the kind of place that warrants a drive-through, but weirder things. I'm not much for their food, nor their what they do, and it seems all a little pretentious to me. So I may have a inbound bias for Chipotle and all things, i.e. trendy. But you've got this huge high out here, and maybe this is what's setting up the resistance from the 17th of April with 3.8 million shares. But looks like right in that level. And, of course, what do you have? 12, 13 trading days in this narrow range right around $600. You really want to watch this thing, but my guess is that you're going to get some kind of little spike out of that. And if you were thinking about shorting it, maybe a good time to take a look at it. Some of the other stocks out here that are moving, Tesla's off about 3%, off about $7, and TSLA. If you saw over the news over the weekend, someone stole the Tesla, wrapped it around a light pole, and broke it in half. And I always like to say, you get that 50-50 warranty with some things like Teslas. If it breaks in two halves, you own both halves. But I don't know if this is really moving it. This stock has just got a story that is hard to live with in that the other guys aren't going to come along and club them. I'm just waiting for this thing to really move. More bad news out of China has put a little hurt on Win today. When we look at this, volume picking up at least from Friday, but another one of these that came back up to its gap down from May 3rd. This thing has come back up. Volume was 2.2 million. Got into it with Friday with 1.3 and pulling back down. But it's hard to really talk past all the problems with declining revenue in China that we've heard about for the last 2 to 4 weeks, and some of the numbers coming out from their economists showing that they're probably going to be a little weaker for the next quarter also. Anyway, appreciate everybody listening, and remember to catch me same bat channel, same bat time, and to sell when you can, not when you have to. See you tomorrow, same time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.